Bob the Builder, can we fix it? Bob the Builder, yes we can. Or maybe not. Let's find out.
Wait. Matron, take them away.
And a warm welcome to one and all. If this is your first time here, I am the big fella that is the Scruffy trader with a probably unhealthy obsession with coffee.
It's coffee time! Coffee, 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 coffee! Cappuccino! Java, yes!
But then again, we all know Scruffy likes it coffee. But he likes the charts as well, and he also likes a bit of a challenge. And I thought in this week's kind of Coffee with Scruff, I'll discuss something that kind of captured my imagination in the sense that I want to see if it's possible. Now, a while ago, I looked at crypto because a lot of you guys wanted me to sort of explore it. And I was a little bit unkeen because I always thought it was a bit like the Wild West.
I didn't think you had it in you.
I'm your huckleberry.
And as it turns out, I was right. It's horrible.
It's a trap.
I think pretty much 95% of what you see in the crypto world, and certainly anybody who says they're making a fortune from it, is, yeah, don't get me wrong. There will be some guys, and there is a couple that I do know of that do pretty well out of it. But ultimately, it's not for me. I find it the Wild West. I find it gambling, and I just find it bloody hard work. But what else is there out there? Well, we all know I'm pretty good with Forex, and I'm pretty good with indices and basic ETFs. Why? Because there's quite a bit of data around it. And within that data, I can see patterns in the chart, and I have certain processes in place that enable me to work with those patterns. However, it's because they have massive amount of historical data. Whereas in the crypto world, there's very little historical data. So it's almost like a penny stock. And stocks is where we're going.
What?
And I'll tell you for why. I'm very curious with it. And one of the things that's always kept me away from stocks is the amount of them. Because when I'm looking at Forex, I'm predominantly only looking at 3 or 4 pairs full stop. And with indices, I only really look at the DAX and FTSE. So really, when I'm putting my concentration level together, I'm only looking at a small portion, very easy. But with shares, it's something different because there's thousands of them. How on earth do you work your way through all those shares? And then how do you pick the right one? Well, there's the fabled penny stock, which again, I consider to be a little bit gambling, but there is another side to this, which is different to crypto. See, with crypto, you've actually, how do I put it? It's too prone for pump and dump and all of this sort of thing. But you actually got to have a bit of money to make money, right? So kind of kept away from it. I didn't really like it. Now, with shares, you can invest a little and then look for ROI, return on investment. So say you've got a penny share and it's costing you 20 pence a share. Right? Okay. Well, if it's on a spread betting platform, it's actually 20 pence a point. So every movement will give you 20 pence. But the margin requirement is very small. Sometimes it's down to sort of 2 or 3 quid. But that 20p could pump up 20 points. And if you're looking for a longer term runner, which is what we are going to be discussing in just a second, then that return on investment can be quite a lot. So what I'm going to do is I'm going to pull up a screener, show you how it works, and then sort of see if we can find it in my web trader platform. And why am I doing this in the first place? Well, let me just flick over and I'll show you. Now, it's kind of well known that I'm pretty sort of au fait with the 5%ers. And if you haven't come across the 5%ers, these are a prop fund that will put the money up to go to market. And then you have a profit split. Brilliant. You know, I personally, as you've seen, I mean, I've passed it many times and I trade personally for these and I do recommend them. And if you're interested, there is a 5% discount link in the description below. But I use this, okay? And we've seen it. Where you buy in, you trade Forex indices, gold, silver, etc. And they'll give you a decent pot of money to trade. Excellent. It went on a little bit different. Because what they are doing now, and it's been running for a little while. And I met the guys in London last week. And again, that cemented my trust in them. So it sparked an idea because I was speaking to one of the guys, Michael. Good salute to you, my friend. And it was wonderful to put a face to a voice. And he's very, very clued up with shares. Incredibly clued up with shares. And he loves it. So that sparked my interest. And what Michael's up to is this. Just trade the pool. Now, trade the pool is where you're essentially doing prop trading, but with somebody else's money. It's that simple. All right. And if you're over in the US, all of the pattern rules, first in, first out, all of that sort of thing, kind of is dissipated because you're trading a central pool, which has enough money in it to counteract all of those rules. Now, they've also brought in a 14-day free trial, so it doesn't cost you anything. Sign yourself up, have a look at it, play with it, amazing. But what I'm going to do is I'm going to trade it on my own account with just a little bit of money. And I'll tell you for why. Because I don't understand it. Okay. Now, if you're a trader that likes shares, go straight in, try the demo. I'm going to try the demo just to see what it's all about. But in the meantime, I want to understand how shares work. Now, for me, I'm a technical trader. So what I look at is technical. Moving averages, RSIs, Bollinger Bands, relation to Fibonacci. Now, in the Forex markets, I understand it very well and it works and repeats very well. Now, in the share world, I'm not looking for short-term bursts as you see me day trading. I want to put investment on the table. So how do I do it? How do I filter out? Oh, there must be over 4,000 shares to go through. That's very hard. So you need a screener. So that's what I'm going to do. So what we'll do, I'll quickly show you how to set a screener up, and then we'll see if we can find some shares, and then I'll keep it running. Simple as that. Give me a second.
Well, we're waiting.
Okay. So what we're looking at here is what's called Pro RealTime Screen. It's a program. It's free to use. Just type into Google Pro RealTime, and you'll be able to sign up and use what's called end of day trading. Now, for me, that's perfect. All it's looking at is daily candles, and that's all I want. And I'm going to set up a little basic screener. Now, this one, I've already marked it up. If you're looking at the screen, you'll see up there it's called Golden Cross. It is a very old system. And if you're unfamiliar with what the Golden Cross is, it's basically two moving averages, a 200, which is the red, and a 50. If the 50 is above the 200, it is classed in an uptrend. If it is below, it is classed in a downtrend. But I want to cut out the noise. So I've added in an extra moving average, which is the 5. And basically what I'm doing is I'm going to use the 50 above the 200 to define the trend. And then I'm going to use the 5 crossing the 50 to define an entry criteria. Okay, so that's a very, very simplistic way of looking at it. If I find a share, we'll drop it over onto the other web trader and I'll show you how we set that up. So first of all, we need to set up some form of a screener. Okay, so up here, and if you look at the way this is all set up, it's all in little sections, so you can drag it around the screen the way you like. So I've got my toolkit up here. I can have my chart section here, and then obviously you can see that I've got this section just up there. But I can set that any way I like, and then you would just go up into here and then save it as whatever you want. As you can see, I've got a couple of workspaces already set up. They're all the same. So I've got my river strategy, which is my bread and butter long-term strategy, which is mainly what I'll be using on this. But for the purposes of this exercise, we're going to look at the golden cross, which is what I have set up here. Okay, very, very simple. So how do I set a screener up? Well, I can set it up for certain criteria. Now, the first one is get used to knowing what this spanner is. You'll use that spanner all the time. So you click the spanner on and it opens up a window like this. Now I've got predefined setups already, but what we're going to do is just make a new one so you can see it. Okay. So if you click new, define the set of shares you want to look at. Now I'm in the UK, so I can look at UK markets, but in this instance, just for ease, we're going to say look at currency pairs. Okay, and we're going to look at all Forex pairs. Okay, this is just to show you how to set it up. Then we'll go into shares themselves. Pro screener. Click anywhere on the screen, and it drags the information that's on this screen into this little box. So now what we can say is, okay, well, I want moving average 200, current period to be below the 50. All right. Or you could say I want the 50 above the 200, whichever you choose. Okay. That's the first set of criteria that I want. Okay. Now, if I just clicked OK, set that for variation from yesterday, and then just clicked that, well, it's telling me out of the pairs that's available, 32 of them, as you can see, are in that uptrend. Okay. Simple situation. All right. So what it's telling us is the price is above there. However, that's not enough, because all that's saying is, yeah, one moving average is above the other. But as we know, and as we can see, that can set you up for a fall. And it's kind of one of the reasons why I'm using this FX, because it highlights it a lot. Okay, there's the collapse. The 50 is still above it, but you would have been in a world of pain. Okay. So add in a little bit extra to it. So we're going to modify that one that we were making. Click there, so it comes back to this. We're going to add an extra condition. Click that again. So what's the extra condition? Well, so we want moving average 1, which is the 5. And we would like that to cross over the 50. The current period, and we want it to match all the conditions. Boom. Right? Same set of Forex pairs. Execute that. None of them did it. Okay. So instead of looking at a full basket, it would pull it down to, well, there's nothing to see today. Okay. So now we're going to change this slightly. Okay. So modify there, pre-design. You might have been wanting to see whether it crossed under the 50 and the 50 was the other way. So this is now saying it's going the other way. Conditions. Nothing. So yesterday you wouldn't have done anything. Simple stuff. All right. Still got our criteria. Modify. Let's have a look. See where we're at. So we'll clean all of this off and do it again, but we're going to do it for shares this time. So what we're going to do, add onto there, modify, set the conditions. I'm going to get rid of that, get rid of that, and start again. Boom. Right. So price. Moving average 1, 5. And I want to see that in this period cross above, because with shares I only really want to be going long, the 50. So it's telling me there. Okay. So I've got that. Right. So I want another condition. Okay. So we're going to add another condition here. And I want that 50 to be above the 200. And I want all of those conditions to be met. Okay, cool. But where do I want them met? Well, if I'm looking for shares, we'll say UK shares and all stocks. Now you can look at for cheap stocks, which is the AM, the 200, the 300, whatever you choose, but we'll just go UK stocks, which is kind of the FTSE, the US one, the UK 100. We are looking for a variation from yesterday, so I want to make certain the market is moving. Execute. Bingo. Right. Now what this has done, oops. There we go. Now what this has done is pulled out a few shares. So we can look at that. And sure enough, there we go. We have the 50 above the 200, and we now have a break above that 50 on this candle. Result. So what it's done is it's filtered everything down. Now what I can do now here is just give it a name. So we'll just call this one Test Up UK. Okay. Click execute, and let's give it its name, which you can see here. Okay. There's another one there, right? Well, that doesn't really look like a nice chart, does it? So don't need to look at that. But that one's not bad because you've got lots and lots and lots. We can see it's been on a downtrend, but it's bounced off that and it's now moving back. Got a nice hammer. That's looking good. What is it? It's the train line. Superb. Could there be a trade here? Well, let's find out, shall we? So let's have a look to see if we can find train line in the shares on my web trader. So I've come here, put in TRN, which is the ticket number it gave out. There it is there, train line. Pull that across. Well, what do we see? Now we see a nice pattern. Very good. How much does it cost? Well, it's £1. I'm not sure whether you can see this. You just drop my head to the bottom. You can see. Well, it's telling me it's £1 a share. Here, £1 a point. And if I just click that on, and it's going to give me an investment of £66 into this. So out of the balance, it would cost me 66. So how would I set this up as a trade? Well, if I don't need that, I'm quite happy with, say, the cost of it, £1 a pop. I can just go, right, indicators. Let's have a little look, moving average. See what we've got. Well, I want the 50, I want a 200, 50 in blue, just so that we can see it. We'll thicken these up. and a 5. Okay, put that in black. Right. So this side's a little bit lagging. What you've got to remember between brokers and screeners, etc., the feeds come from different places, so they can change. But what that Pro screen has done is it's pulled out a share that is highly profitable or highly possible. So you would just put this in a watch list, but you can kind of see where it's driving at. We've got a hammer here. All right. Now I believe in letting prices come to me. So my entry point would be above that. Okay. So even if it crashes through, it's going to drag that up. So how do I work out a stop? Well, my stop is very simple. Down here. So what I'm looking for is there's the maximum stop down here. So that would be £32. So I would invest £32 into this. And then my first stage target would be up here. Another drop line there. Okay. Just to give you an idea of the way I would look at this. I would drill into this a lot deeper. But that is the risk criteria or the investment. I'll explain that a little bit. And then what I'm looking for is a break-even point here. So I would just hold the investment till it gets there. As soon as it hits halfway between 1 to 1, I would pull the stop up to break even to give it some room to breathe still, because it's got all of this. But also, if it does turn round, it's not going to belt me too hard and all I've lost is time. Okay. And then my aim would be to run this as much as possible, taking off little sort of 10% every time it went halfway up or at new levels, etc. I'll set up a little spreadsheet for this because I do like to work with sheets. Now, it's just a test and I'm dealing with pennies. But basically, if I was going to do this, it would be train, today's date. It would be open, so it's not going to put any of that in. Pound in investment. Now, I've just worked out what the stop is based on hiding it below a moving average. Will be £32. So I have to ask some questions at this point. You know, that's 25% of that account if it goes. Okay. Whereas some of the others, and I'll flip them on, they're only pennies. You know, you want to trade the chariot, pennies. Okay. And then you can keep your balances. And then each time I have a split, I can put it into there. So let's just say I triggered it and I took £10 off it. Well, it increases that, tells me what my running is, etc., etc. This is just work in progress, something I'm putting together. Okay, just drag that down there. And away we go. Happy days, guys. Happy days. Why am I putting it on a spreadsheet? Just so I can journal it and get it to work. And I'll put that spreadsheet when it's finished this week into the tools. But this is the grand experiment for me. Give you an idea of how much some of these things cost. Let's go on to shares. We can have a look at filter by small caps. I think some of these are like pennies, just literally pennies. There we go. Not that you can see it. I'll drop my head to the bottom. Bottom of the picture. There you go. That costs 11 quid. So it's nothing to go in. And if we're looking at, say, oh, well, fair enough. There we are. What would be the cost of a trade here? So from there down to there is 15 pips, which at 50p, it's about £7. So you've got a £7 investment in that trade, and the margin hardly takes anything off your account either. So you can use a small balance to build it up, is what I'm driving at. And with shares, it's really a very simple system. Now, this is all new to me. It genuinely is, which is why this video is maybe a little bit higgledy-piggledy in the sense of what is he rabbling on about. It's just a new venture and a new sort of experiment. And I only decided to do it the other day, which is why it's a bit rough and ready. And I've knocked up a basic spreadsheet to sort of try and understand what it is that I'm looking for. But in that spreadsheet, what I wanted to see is I want to know what the share is that I'm running, the date that it opened, the date it closed, so I can have an average of how long I'm holding these positions for. But I'm not looking at risk reward and all of this. I think that's a fable. And I did touch on this in Telegram today. And if you want to go into it, it's free. There's a link in the description below, as there's a link to many things. And join the discussion. No dickheads allowed in there, no selling allowed in there. So if you are a moron, don't bother coming in, because I'll just throw you out. And if you're coming in just to sell something, again, I'll throw you out. I just want the guys to be peaceful and enjoy the chat. And today's chat was on risk reward. Now, risk reward is, let's just call it a hot potato subject.
See mine.
Well, Mr. Webley, this is an extremely dangerous collection. It's a wonder nobody's been hurt before.
Nah, just a load of junk.
Because in the industry, it's the way it's sold, you know. Basically, the industry tells you you are crap, but you're still going to make money. No. You know, if you're a plumber and every time you leave the house, there's a leak, how many times are they going to call you back? Of course they're not. You know, might forgive you once, might forgive you twice, but you do it 6 times out of 10, you'll have the worst name in the town. You know, that's common sense. But in trading, if you think about it, why is everything so much put on risk reward? It's because it's an easy sales tool. You're rubbish, but you're going to make money. But what they don't tell you is every trade has to be identical. Same stop, same target. But there's a variable. And that variable is the conditions. Because you have to have exactly the same conditions. Same candle size, same trend, everything. Same volumes. But they're not. They're always different. Which is why risk reward always sets you up for a fall. Personally, I work on what I call ROI, return on investment. And it looks wide to start with, but it's not.
Are you serious?
Not really, because I break the positions up and I work backwards into it, which naturally increases my risk reward if that's the route you're going down. The route I go down is where I call it an investment. I will invest X amount into the trade because I know monetary how much that costs on the point of pressing the button. And if monetary is in line with the size of my account, in other words, it's not going to damage it too much, then I'm happy with the trade. I'm at peace with the trade. And then from there, I want a better pricing into the trade, which is why I go backwards. It's like getting a discount off my investment because I base the investment on the full position size before I press the button. But then I build up to that position size, if that makes sense. So for argument's sake, just to clarify, if I started with £5 a point, I would work out what the full investment is on £5 a point. Now, if that's 50 quid, that's fine. But I won't put £50 into the market at the first press of the button. I'll put £1 in. Now, if it runs for me, brilliant. But I always go into the market expecting to be wrong on the first entry, probably the first 2 entries. So 1, 2, 3 are my trade. And 4 and 5, when you see me break it into 5 positions, are there to protect the trade. It's a completely different way of thinking, but it's a profitable way of thinking. But if you think for a merry second that you only need to win 4 times out of 10 and you're going to be rich, you're living in la la land. You genuinely are, because you're always set up for a fall.
If you can't take a little bloody nose, maybe you ought to go back home and crawl under your bed.
So that's kind of my take on risk reward. And if you want to break it down into what stats are, I have shown my stats many times. The way I basically work things out is very simple. I start at 1-to-1. So I expect the market to go 50 that way. I expect the market to go 50 that way. I'm at a 50% chance at that point. I want the odds in my favor, so I stack it backwards, reducing that risk and exposure, which means if it has to come from here back over to there, it increases the upside. But it also gives me the opportunity to carve and make adjustments as I'm going, but in a profitable expectancy. And that's why I've held over 85% hit rate for years. And for those of you who followed me, I haven't faltered, because I rinse and I repeat and I do the same thing over and over. Now with shares, I'm going to apply the same principles, but I have to be very mindful of that investment because they're going to be running for days on end, which is why I'll still stage backwards into the investment, but I will be looking to hold the trade a lot longer than I normally would for Forex, because with shares, I expect them only to rise. I'm only looking for rising shares, but I'm also looking for them to come from a devalued area. And that's why I'm looking at the moving averages, etc. I want to be based. So it's going to be a grand experiment for me. Do sort of subscribe and ask your questions, and I'll try and answer them best I can. Technically, I understand it. Fundamentally, not so much, because I haven't got time to look through 3,000 shares, bank statements, etc. But I can see how they perform on the charts, and it's why when I was looking through, I was saying, well, that one looks good and that one doesn't look so good. Why? You could see it in the candles. If the candles are sporadic and all over the place, there's not a lot of interest in it, which generally means there's not a lot of volume in it. Whereas when I was looking at the train index, that had big body, nice candles, and you could see it. So if I can change all of that 3,000 shares down into a handful, I'm going to spend an hour or so just looking at the chart, see if I like it. And if I do, put it on. And because of the small amount of investment involved, in other words, margins, some of them are down to sort of 2 or 3 quid, £10, £20, even 50 quid's not a lot. Not really. I can have a big portfolio of shares and then you just manage them. And that's why I had carve points on that spreadsheet. You'll have seen it had from 1 to 10. Well, if I'm taking 10% of the profit off at each sort of checkpoint, that means I've got 10 bites of the cherry. But every time a carve comes off, that becomes realized profit. And that's what those 10 points are. As I go through this experiment, I'll expand on that because I need to change the spreadsheet quite a bit. It's all rough drafted. So there you go. But you tell me, guys. Are you interested in share trading? If you are you good at it? If you want to give me some tips, I'll gladly take them. Because this is completely new to me. Completely new. So I'm going to put in my technical ability into it, but I want to see if it can work. I've proven it in the Forex markets and indices markets time and time again. But this might even fall flat on my face. Who knows? Because I kind of did with crypto. I went into it, put 500 quid into it, and then when the arse fell out of it and it collapsed, lost a lot. Was I bothered? No, because I didn't need the money. Put it in simply to play with it. And likewise with this, I just put so 100 quid into it or whatever it was, and I'll just see if I can play with it. And if I get an interest in it, then I'll invest more money into it. But I think if you're going to trade on any trading, have some skin in the game. And that's why I like prop firms. Or I'm going to rephrase that. I don't like prop firms, actually. In fact, I've got very little time for them because a lot of them out there, and I get asked every day if I'll promote certain companies, and they offer to pay me to do it. And I say no. And the reason why I say no is because I don't believe in their ethos. And a lot of them have really set you up to fail, you know. And that's the thing with this industry. A lot of it is engineered to make you fail, as is most businesses. But with the 5%ers, the reason why I stick with them, and I have done for a long time, one, I trade personally for them. So I understand what's going on. But they have very little restrictions. They want good traders because it is their money they're putting on the line. And if you're not good, well, it hurts them as well. But you're allowed to trade the weekends. You're allowed to trade overnight, all of these different things. You know, whereas a lot of them say, right, you're not trading overnight. You're not trading the news. And you might have a good position built up, but they'll just close it off. These guys don't. They let you get on with it. Do what you like. They give you the time and the tools to do it. You know, what is it? 1% a month over 6 months. You know, 6% in 6 months. It's nothing. Whereas some of them are out there telling you to do 10, 20% in 30 days, forcing you to gamble. It's wrong. So that's my take, and that's kind of why I trust the 5%ers and why I put a lot of time into them. And I know them personally. I've shook hands with the top guy, you know, Gil, the CEO. I've shook hands with him, and he's got a moral compass. There's Saul, Toma, Alex, you know, got Jordan, who will be on the channel soon, who's a professional trader in his own right and has a very similar outlook to trading as I do. And I know them all. So in that sense, the community of trading is there. And community is what this is all about. Don't be an island, be a country. What a strange metaphor that was. No, what I was trying to get at with that is never be trading on your own. Always have people around you that you can talk to, talk the same language, and you'll find trading becomes a little bit easier. Kind of where the Scruffy squad came from. Trading's a lonely job, and it was created into a community, and that community has grown. And don't get me wrong, there's not a great deal of us in there, but the ones that are in there know each other personally now. We can bounce off each other all the time. So when things go wrong, which inevitably they do, I mean, even I have bad days, and some days I have more bad days than good days. But as long as I don't lose the month, I'm happy, you know, because I have a single plan. I follow that plan. And that plan is not only for success, for when things aren't going so well, I plan my way so I can get out of it. And you do that through community, you know, because you learn off each other, shared learning. Hope that makes sense. Anyway, I'm going to have my coffee. I'm going to finish these sheets. This is a very rough and raw video to give you something to think about, and sort of a project that I'm going to be running for myself, certainly throughout next year. And I'm putting the groundwork for it now. So again, that comes back to something that I often say. Your homework is what gets you through trading. Now, most of the guys who know me and see me each day, they know I sit down for a good hour and a half before I even contemplate putting a trade on. I want to see what the state of the market is today. I want to know what the news is today. I want to know my charts are ready for today. A lot of homework. This is new to me. So I'm going to spend the next 5 weeks putting it together, putting my screeners in place so I can pull everything down to a small basket, understand what strategy I'm going to use. Well, I'll tell you exactly what strategy I'm going to use. I'm going to use the river on this, because the river is, well, let's put it this way. It's been profitable for years, and I think it can work on this. So I'm going to apply some of those principles into shares. And the one principle I'm going to work to is I'm only going to be buying shares. I'm not going to be selling them. Okay, so there's no shorts, it'll all be long. I'm looking for long-term growth, and I'm looking for holds probably into weeks rather than days. That's the general gist of what I'm trying to achieve. And then we'll see if we can grow a small pot into a half-decent pot. How's that? So, as I said, cherish your thoughts, drop it below, wish me luck, or tell me your horror stories or your good stories. And if you want a shout out, I'll happily give you a shout out on anybody who drops a comment below and gives me some good advice. How's that? So as always, guys, trade well, keep your risk managed, but above all, do what you love. The money will follow. See you all in the next one.